Hello, accounting students. Hey, as we're getting near the end of the semester, we are actually going to skip Chapter 8 and move directly into Chapter 9. And in Chapter 9, we're going to bring back an old friend of ours, the journal. We haven't dealt with journals in a little while, but we are now. We're going to finish up with looking at special journals. These are journals that are used to record transactions that happen frequently for a business. And we're going to start off by looking at special journals that deal with purchases and with cash payments, businesses that would have a lot of purchases and cash payments that they need to record. So, that being said, let's get started on Chapter 9, and we're going to begin by looking at some definitions. The first definition I want you to have, and get these in your notes, is merchandise. Now, I am going to move a little bit quickly here, so pause this video whenever you need to get everything in that you need to get in to your notes. But merchandise is just simply the goods that a business purchases in order to sell it. A merchandising business is a business that purchases and sells merchandise. That's pretty straightforward. A retail merchandising business is a business that sells to those who actually consume the goods. In other words, a retail merchandising business sells to the end user of the good, of the product. There are also wholesale merchandising businesses, and that is a business that sells or resells merchandise to a retail business. So with these definitions in mind, you should keep in mind that there are a few businesses that can be both retail and wholesale. There's no set rule that you have to be one or the other. But with that in mind, let's take a look at a few businesses that are in our local area here in Northern Illinois, and see whether or not these would be considered a retail or a wholesale merchandising business. If you drive down Kilburn Avenue on the west side of town, you will see a big facility for Dean's Foods. Is Dean's Foods a facility that would look like this? Would that be retail or wholesale? Well, this doesn't look exactly inviting for someone like you or me to just walk into a nice store type environment. So this is actually a wholesale merchandising business. They actually get the dairy products and package them here in such a way that they can make it look appealing to the end user, but they're going to sell their goods directly to a grocery store, to some sort of a market. They would not be selling directly to the end user like you or me. So Schnucks, the grocery store chain, this would be, of course, the retail merchandising business, and they would actually purchase the merchandise from Schnucks. That is, Schnucks would sell merchandise to them. Dean's Foods would sell merchandise to Schnucks in the wholesale arena, and then Schnucks would be the retail merchandising business. They sell it to the final consumer. Here's another business that's over on the west side on Jefferson Street. You may have never even noticed it. It's pretty nondescript as you drive by, but Bill Doran Company is actually quite a large company. And you see a picture of the interior of their building right there. And I don't know if you can tell what they do, but they sell flowers. Okay, do you think this looks like a retail merchandising business or a wholesale merchandising business? This is a wholesale merchandising business. They actually get the flowers that are oftentimes imported from overseas or shipped from areas further south or west where a lot of flowers are grown. And then they package the flowers in such a way that they can sell it to a retail outlet, such as an Amling's Flowerland store. So Bill Doran is the wholesale merchandising business that sells to a retail outlet like Amling's. And then Amling's would sell to the end user or the final consumer, which would be people like you or me. One way you can easily tell the difference between a merchandising wholesale or retail business is just the appearance. You know, the retail outlets are going to look much more appealing, both on the outside and on the interior, typically than a wholesale operation would look. Okay, a few more definitions. Cost of merchandise. That's the price that a business pays for the merchandise it sells. So think about Schnucks. They're buying lots of dairy goods and other grocery items. So they're going to record the price that they pay when they buy this merchandise as cost of merchandise. That sometimes shows up in other businesses as cost of goods sold. That's the same kind, it's the same thing basically. Cost of merchandise and cost of goods sold are the same. You'll see them both, and don't let that confuse you if you have one as opposed to the other. They're the same thing. Markup. A markup is the amount that's added to the cost of merchandise in order for the business to make a profit. So we've been looking a lot at revenue thus far this semester. Well, revenue simply is the cost of merchandise plus the markup. And finally, we have a vendor. A vendor is the business from which merchandise is purchased. Typically, a vendor is going to be a wholesale merchandising business. But it doesn't have to be. Once upon a time, I worked for a large telecommunications company, and I sold services, telecom services, to other businesses. So I was considered the vendor when I worked for that company. I was a vendor, my company was the vendor, and I represented the vendor, and we sold to other companies services, not goods, but services. So in that sense, we weren't really a merchandising business because we did not sell goods. We sold services. Okay, so special journals. A special journal is a journal used to record only one type of transaction. Think about the journals we've used so far. We've been using in the past this semester the general journal, which can record any type of transaction. Now we're getting into journals that are only used for one single type of transaction. They're no longer the general journal. And here's some examples of special journals: purchases journals, sales journals, cash receipts journals, and cash payments journals. There are more, but these are common special journals, and these are the types of special journals we're going to look at in this chapter. Why would a company use special journals? Well, if you think about it, a company is going to use a special journal when it's got transactions of similar nature that recur all the time, that are commonly occurring. So you use a special journal when you have frequently recurring transactions of the same sort. So if I'm in a business that has lots and lots of purchases, there's a good chance I'm going to have a special purchases journal. If I'm in a business that is receiving a lot of payment in cash as opposed to payments on account, then I will have a cash receipts journal. So you can see it's when you have transactions of similar nature that occur a lot. A special amount column will typically be showing up on these special journals, and they are used to record frequently recurring transactions. And for example, if the company uses a special journal for purchases and all purchases are made on account, then we'll have a special account column for accounts payable. Okay, we're purchasing stuff on account, that's an accounts payable, so we will use a special journal with a special account column for all of the accounts payable. Every purchase transaction must have a credit and a debit entry, just as in the past. Debit purchases are an expense, so we would always credit the accounts payable to record the, for the balance sheet item, but the purchase itself would be a debit. So we have both a debit for the purchase amount itself and then a credit for the accounts payable, that being a liability, and liabilities are credited. So just keep in mind, we will always have both a debit and a credit for every transaction. And finally, I just want to give you an example. Here's a purchases journal. And you can see we've made purchases from all of these companies here on the left. We have our dates over here. We have an invoice number, and we have an invoice date. And terms, we'll get into terms in a little bit, but basically we've touched upon this a little bit in the past. Oftentimes for accounts payable and accounts receivable, if you pay your bill or receive payment on an account early, you get a little discount. And so if you look up here, 2/10 means that you would get a 2% discount if you pay your bill within 10 days. And then N-30 means the entire amount of the account is due in 30 days. So here we have the accounts payable credit. We bought something for $759. Freight in debit. Freight in would be meaning that freight was included included in this purchase. And then we have a purchases debit right here. So the credit for our accounts payable being $759 is equal to the two debits. Okay, we had to pay for freight, and then here's the actual merchandise costs that we purchased. If we look at Richter and Son, same kind of deal. In this case, there was no discount offered for early payment. The amount that we're crediting to accounts payable is $829, which includes freight, shipping expense that is, of $57, plus the merchandise itself, which was $772. 772 plus 57 equals $829. So our debits and credits are equal. And as we add up all our credits and all our debits, you'll find that they are in fact going to be balancing 3327 and then 152 plus 3175. That's going to equal or balance out with 3327. And we're going to not deal with these parentheses here. We'll get into that a little bit later. And with that, we're going to close this presentation. And let's see if you have anything to work on in Canvas. We'll talk to you later.